It is equally important to innovate inside and to acquire outside the competence that you don't have. The internal innovation process is essentially a very dangerous, quote-unquote, system in the view of the investors, because if you are a public company, then the R&D expenses go to the bottom line. And so you increase expenses, but you don't have any revenue to account for R&D. But if you don't do that, then you don't create a culture inside the company. So when you go outside and for example, acquire a company that has the important items that you need for your products, you don't have a way of collecting the important information from the company and being able to integrate the acquired company into your own company. So in my opinion, it's both, right? But it is much more effective from a financing point of view to acquire outside than doing inside. Corporate ventures follow two models. The one is to could be considered as any other venture capital firm, so we are looking for returns. The other one is aligned with the strategy of the company. Both of them are valid. It depends what your ultimate goal is. However, I believe that it's more effective to at least to direct your investments in the area or the general ecosystem in which you operate. So for example, if you look at Intel Capital, it's a typical example of investments that are not necessarily related to what R&D is doing inside Intel, but it is driven by the need or the aspiration to make the ecosystem which Intel plays richer and more vibrant. In terms of the restricting the opportunities of a company where corporate venture capital is investing, is actually, in the case of Intel, is actually a plus. Is creating a stronger basis on the valuation, because if Intel Capital is invested in them, then it's not only a financial statement, but it's a technology statement, which means that these companies have intrinsic value. So actually it's a positive. Now, on the other side, there are other venture capital funds, the ones that are more directed towards the R&D interest of the company, that actually are a negative, because they restrict not only the attention of the founders towards that particular direction that may not be the best after a while. So it may change and you need to adapt, but the fact that you have to be aligned with the need of the company restricts that. So intrinsically is a quote-unquote bad deal for a new company because it's limiting flexibility in their pursuit of new markets.